Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Sharon Riddle with us from Excalibur Investments of Texas, down in Texas. She is a multifamily woman. She's rocking it down there since 2015 or 2005. She's been down there doing multifamily, and we love talking multifamily. It's one of the most popular assets to invest in. So I'm sure she has a lot to go into. And before we get into the episode, I have to say this, every episode recorded during the month of February. As I mentioned, we're down in Santa Rosa, California, me and my family, and I was not able to take my fancy podcasting equipment. So right now I'm on the travel mic. It is not as good as the other one. So if you guys can't really hear me, I apologize for that. It's only going to last a month. In a month, you can come back and it'll be back to the regular quality. But with that said, Sharon, thank you very much for hopping on the show.
Well, thanks for having me, Gabe.
Absolutely. I told you right before we got on here, we like to start with stories. So take us back to the beginning of your story. How'd you get started in real estate?
Okay. Well, way back in 2005, I actually started out in single family and made the transition over to multifamily in 2015. So just what happened was, and I'm not exaggerating, my business partner and spouse came home from a Managing Your Money seminar. And I grew up a construction brat. So being around contractors, no big deal for this woman. So that's how it all began. Because he still had his W-2 job and I had my W-2 job. And I got into acquiring single family homes first, and then ended up eventually having to fire a realtor who was our property manager because I thought I could really do it better. And that's how I ended up keeping that job as long as we were in single family. And then moving over to multifamily, I could really see the expansion of that. It really, I just blew me away the first Sumrock event that I went to. It was Rat Race to Retirement. Okay. And I'm like, wow, I am thinking way too small. And Dan turned to me, he thought the same thing. So yeah, that's how it began in the very beginning.
That seems to be the case with everybody who gets started in single family. You only know so much about the world of real estate, and then everybody talks about buying a house, renting it out, and so you start there, and then you quickly realize, like, man, this could go a lot faster if I just went to a different asset class.
Exactly, I had to make that move.
Yep. So let's talk about. You have a lot of experience, so we can go into a ton of stuff. Let's talk first about the transition. So you were doing single family, you were buying single family rentals. Mm-hmm. What was that first deal like when you finally decided, all right, it's time to go into multifamily, it's time to make a move?
Well, what triggered that is that we really couldn't acquire enough properties. So that's really what happened. And we even went to
find enough deals, or
not for the formula that we were working towards. So, we had a mentor in the beginning that we utilized that formula, and we really couldn't deviate from that a whole lot. So that was an issue. Yeah. So what we did is we even went to a boot camp, to acquire more properties because back in 2008, credit was pretty constrained. And so we went to Alan Calgo's boot camp to work with private lenders. So that was kind of like syndication, but on a really small scale. Mm-hmm. And those investors were our bank, but we still couldn't acquire enough because they were just paying too much for single family homes in the Dallas-Fort Worth area at that time. That's just what was going on.
Yeah. But looking back now, 2000, was this before the crash, before the housing crash?
Yeah, it was. Yeah, it was.
So that first deal that you bought, how'd you find it? How many units was it? And what was the experience like in terms of when you compare it to buying single family?
Okay, well, our first deal was actually a in Duncanville, Texas.
Okay.
That was and we were an LP on that.
Okay.
So just to let you know, we're an
I feel
LP.
like that's a smart way to do it because especially when you're jumping, when you're switching asset classes, it is still real estate, but there's a lot of nuances when you go into a new asset class. And so if you can be an LP on a deal, watch somebody who has experience run a deal, it'll make sure that you don't make a lot of mistakes that would otherwise be made.
Exactly. And it gives you an opportunity to kind of test out the asset class.
Mm-hmm.
I mean, honestly, but that property ended up having a 3x return in 30 months.
Oh
That's
wow, that's
even,
great.
I know, I haven't had anything beat that
Yeah,
as far as duration.
yeah,
I've had some that have gone a little more than three, but not in 30 months like that.
yeah.
And the reason that we even invested in that particular property is we'd had a single family home with a longtime tenant. And that portion of Duncanville was even more, well, as far as an investment, it was even more lucrative than where we had had our single family long-term rental.
Gotcha.
And to even get on that particular deal, I had to really literally kind of sprint after the general partner because it was a solo general partner doing that within the Sumrock community. And I literally had to call out his name at a Sumrock event and say, hey, where do I wire the money? And that is no joke.
Wow.
And that's how we got on that particular deal.
How many doors was it?
I'm trying to remember. I think it was like 240, something like that. It wasn't
Oh,
super big, you know. So
240 deals or doors?
that's something like that. It was, I mean, we were an LP. So,
Yeah.
we were just coming in as an LP. So,
Yeah. That's a large number of doors for a solo GP, just one person running the deal.
yeah, that's true. He doesn't run as a solo
Okay.
anymore. So that
Yeah,
was
yeah.
a lot of pressure on him. He'd come from single family world as a wholesaler. So
Mm-hmm.
he was used to that. That is not his business model now.
Yeah.
So he does have partners now, and I'm glad for him because that's just too much stress. I mean,
Yeah,
some
yeah.
people still do the solo GP thing,
Hmm.
but more just to keep the property moving forward, and in case that you have an unusual circumstance
Hmm.
happen,
Yeah.
like a death or an incapacitation, you don't want the property just down.
Sitting there. Yeah.
Yeah. No decisions being made forward because you've only got one.
Yeah. Yeah. I've done it both ways. I've been a solo GP, just me buying a property, running the deal. And I've had partners, and I definitely prefer having partners.
Yeah.
You get a better return for yourself if you're just the only GP, but one, it's not as fun. You can't,
Right.
you're not bouncing ideas off of somebody. You're not, it's not as fun when you're the solo GP. But
Right.
two, there's just so much stress if you're the only person doing it. You can't lean on anybody. You have to do every single little piece of
You
work.
do.
And so it's
I will say though, here in Texas, Kenny Wolf, 'cause I am a Kenny Wolf investor too, so Wolf Investments on the LP side, and that's a passive investor. Just so I mean, I'm sure your audience knows because they're a little more seasoned than some, but it's passive investor. But he still operates solo, but he's built his company,
mm,
so his
yeah,
employees can move forward and carry forward in the event something occurs with him.
yeah,
So a whole different situation.
yeah. Okay, so let's fast forward just a little bit. This was so it sounds like 2015 is when you did that first multifamily.
Yep.
Since then, it looks like what 3,507 units to date. You've
Yeah,
worked.
we have it's 18 properties, and I've gone full circle. So they've all exited and sold on about half. So
Wow, that's great.
yeah, so that's a pretty sweet spot.
And it looks like you've been kind of all over the place, Texas, Colorado, Oklahoma, Florida, Ohio. So what is kind of your thesis now? How are you approaching the business, and how has it changed since you did that first one?
Right. Well, a lot of things have changed. First of all, we've had all of those interest rate hikes.
Yeah.
So in some ways, it almost feels like 2008 again.
Interesting. Okay.
Yeah, just because of the credit constraint. You've got that challenging debt market going on right now. And so you've got to have your underwriting conservative to make those numbers work. And I will tell you, my partner and I, we always run the debt by James Ng with Old Capital.
Okay.
Always, because you have to know that debt position. It's really critical.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
And you said James with Colt Capital. He's kind of your
his name is James Ng.
Okay.
ENG. I'll give a shout out to James because he's a really super bright guy, knows his business. And it's Old Capital.
Okay, cool.
Yeah.
So are you guys, what is your kind of bread and butter? It looks like you're in a lot of markets. Do you focus, 100,000 with a growing 100,000 plus population with a growing job growth, or are you looking in tertiary markets? Where are you actually looking for deals now?
Well, right now, because of the debt and that situation, I'm not looking in tertiary right now. I've had to pull back.
Yeah.
So really, as far as general partner deals versus passive deals, I'm looking at Dallas-Fort Worth because honestly, it's an easier sell to my investors.
Yeah.
And the properties will hold their value well.
Mm-hmm.
And I can work to the value add plan and move a property to the next level, and I can just make that work. And it's more challenging in a tertiary market, especially with the debt situation we've got.
Yeah, and DFW. I mean, I think I saw like an infographic yesterday, and it was talking about it was showing states by population and then the projections. And it was like New York, when the country started, New York was just crushing it, had way more people than anywhere else. And then California had way more people. But it was showing Texas is supposed to exceed California's population, within the next couple decades, and then just keep growing. And DFW, being one of the major metros there.
Right. And Gabe, 80% of the population within Texas really is within what they call
Metroplex.
Well, the triangle area. And the triangle is really Dallas-Fort Worth, Houston, and San Antonio.
Interesting. So
that's the little triangle. And that's where I have certainly had investments in the triangle.
Yeah.
A lot of commerce happens there too.
Yeah, absolutely. So how about underwriting? When you look for deals, like what is the return that you're looking for? Do you have a cap rate that you're going into? Do you only buy value add?
Well, what we really do is we really try to buy a lighter value add. And we're really trying to stick with
paint and
yeah, well, it could have a few more things, but kind of keep it a little lighter just to keep that CapEx budget a little tighter, a little smaller, so you can have the return to the investors, but also stick within 75 to 100 units, just keeping it a little smaller, because then the equity raise is a little more bite-sized.
Manageable. Yeah.
Yeah.
Yeah, makes sense.
Yeah.
Cool. All right. Well, hey, I took a peek at the clock. It looks like we have run down our initial time, so it's time to jump into the quick question round. Are you ready?
Okay, let's do it.
It starts with education. It could be books. It could be Netflix series. It could be YouTube channels, whatever. I need 2 recommendations, one for general life wisdom and then one for real estate.
Okay, as far as the books, real estate, I really do love Tax-Free Wealth. It's by Tom Wheelwright, and he is Robert Kiyosaki's CPA. And the reason that I love that is because he ended up directing us to our current CPAs with provision. So got a bookkeeper, I've got my CPAs. But also, if you take a look at the read, it really has the tax tips, the points, the goals, anything that you're really, that they're wanting to highlight with you. They make it super easy for you. It's kind of like a no-brainer, no fail. You're not going to miss what they want you to learn because they're going to highlight it so well in the content.
Yeah.
And then regarding real estate, I mean, that was my real estate. And then the non-real estate, I really like The Power of One More. And part of the reason that I like The Power of One More, and that's Ed Milet, is one thing that really struck me when reading that is he talked about watching a silent movie. And when he described watching a silent movie, he was talking about are people's actions or behavior really lining up with their words? And if they are, then you don't need to really hear them talk because you're already going to know what they're going to do. And I thought that was a pretty intriguing way of thinking about that.
Yeah. Yeah. Integrity is the number one thing that you need to exhibit in business. I mean, in life in general, just because relationships are the most important thing in life, and integrity is what, it's the glue that keeps things together. So good recommendation. I'm going to have to check that one out. You're actually the first person to recommend that book. So.
Oh, wow. I'm really surprised at that.
Yeah. Yeah. 400 something episodes. Well, people usually recommend Rich Dad, Poor Dad. And then for life wisdom does kind of go across the board. But yeah, good recommendation. I'm gonna have to check.
Well, I have read Rich Dad, Poor Dad. So, and I've read Second Chance. So that's some awesome stuff. But it's real estate.
Yeah.
You guys move about non-real estate too. So,
All right, next question is for your younger self. So let's go back to the Sharon of 2008, who was just getting into single families. Go back to her, look her in the eye, give her one piece of advice moving forward.
Well, one piece of advice moving forward would be start in multifamily. I'm serious. You can really get more expansion more quickly. And I would really start there. And that's what I would do. Ask a lot of questions about the people I'm around. And I would also seek out a mentor. I would really hone in on that super fast. I didn't do that back in 2005. I mean, we had coaching, and we had a coaching team through Russ Whitney. So that tells you how long ago that was. But not a specific mentor. And then also a mastermind. If I was talking to my younger self now, I would I'd be in a mastermind. And I am in a mastermind now through Sumrock. I'm in their millionaire mastermind. And you just don't have to go it alone. You might as well have access to a brain trust.
Yeah.
Because you'll just make better decisions for yourself and for your family because of who you are around. You're not around broke people. And so you don't think those kinds of thoughts, and you're not around naysayers. And it's so critical because sometimes family and friends, even though they love you and they don't really mean to really rain on your parade, they do, because they just don't understand what you're doing.
Yeah. Yeah. And every time I see it in myself, when I'm around, high level investors, and I notice my own thoughts start to elevate, I remember this piece of wisdom, and I'm just like very thankful and appreciative of how true it is. Like the people you surround yourself with definitely impact your thoughts impact your actions. So if you surround yourself with people who are doing what you're doing, who believe in what you're doing, and believe that you can achieve what your goals are, then it makes it so much easier to move forward. Which is why I love this podcast.
You really can't help but move forward.
Yep,
Really
exactly. And on the other piece of advice you mentioned, I used to keep track. I'm going to put it in the bucket of this one thing that I used to keep track of, which is how many people said they wish they got started earlier. You said you wish you started multifamily earlier. Same kind of idea. So anybody out there listening, if you are just thinking about real estate, you're on the bench right now, take this as a opportunity to kind of kick yourself in the butt and just get out there, get in the game, get moving, buy something. It can be a single family, it doesn't matter. Just go out there and get involved in a project, because 10 years later, you're going to wish you got started earlier, like 95% of the investors that come on this show. So, all right, that is the opportunity to move us to the next question. And this is about the US. It is a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Single metro, it's Dallas-Fort Worth, Texas.
DFW.
It's
a good one.
DFW.
It has Dallas. I have 2 self-storage facilities out there. And whenever I fly to Dallas, I'm always just blown away at how big that airport is. I swear to God, you can drive like 30 minutes through this airport and you're still in the airport. It's crazy.
Well, what's interesting, Gabe, now that you mentioned DFW Airport, my dad was part of the construction subcontracting team that built DFW.
Oh, nice.
And he took us out on the runways when it was still part of the old Carpenter Ranch, and the runways were dirt. They hadn't poured the concrete yet. So he felt it was going to be so historic. He thought that was one of the most monumental things that he was involved in helping build. He took a lot of pride in that. So that's way back in the 70s. So throw back to the 70s. But he was really proud of that.
Great job. It's a good airport.
It's a small city.
It was a small city. Oh, the airport. Yeah, it is. Yeah. It is its own city for sure.
It's its own city.
All right. Next question is about finding deals. It all starts with generating leads, reaching out to sellers, and getting it under contract. So what's your favorite way to find good deals?
My favorite way to find good deals is calling brokers. I've been calling brokers for over 2 years. It gives me a couple of things, not only the deal at hand, but also what's in the pipeline. And it also helps me establish a firm relationship with the broker, because I want them to think of me top of mind. Yep. When something is coming up, I want them to be able to think of me and our general partner team as we search for GP deals.
Yeah, and it's funny, even like when we assign deals, when we wholesale deals, the person that we end up reaching out to first, it's usually just the person that I spoke to most recently. And even if I have a stronger relationship with another group out there, when it comes to just moving a deal, I never make a tally of, these people are closer to me than these people. It's just the first person that pops in my head. This is a good group. I'm going to reach out to them, which is just, it goes to show when you're trying to generate leads, just make these connections and keep making the connections. Because if you recently talked with a broker, you're going to be top of mind with that broker and they're going to send you the deal. So
it will. And I will say that last year we were best and final on a couple of deals. Mm-hmm. So, after, over 2 years of calling the brokers, they're like, hey, this team, they can make this happen. So I think that has only strengthened our relationship with them, because they've been on that journey with us. And there's going to be one that really works. The price is going to work. Property is going to work as far as the location. And they're going to be there with me and our team making it happen.
Yeah, there you go. All right, second to last question. This is about lessons learned. Not every deal we get into goes the way we expect. Sometimes things go a little sideways, but in those deals is where we have our biggest lessons learned that we can take on to the next deal. So what is a deal that went a little sideways for you, and what was the lesson that you pulled from it?
Well, the deal that actually ended up going a little sideways, and that this was an LP deal. It was over in Irving, Texas, and it happened that during the big freeze that we had in Texas that was so severe that even the ship channel was frozen and ships could not pass through it. So I'm just letting your audience know just how great of magnitude this situation was.
That's kind of crazy, yeah.
It was like 300 units, something like that, and 200 pipes burst.
Oh no!
Major situation. The general partners were so stressed out. They were having to work through this insurance process. And I will tell you, as odd as it sounds, fire is better than restoration and water damage. It is, because they were put through the ringer. It really put such a great strain on the partnership. They are not partners. And we came through it in the back end, but we didn't hit the metrics we thought we would. And it took a little longer to sell the property. But I think the lesson of that property is persevere, don't get rattled. Because I don't get rattled. I don't get rattled. I have a couple of fires that occurred on properties that we acquired as LP investors in 2003. And we just weren't rattled. It's a long game, and you've got to be in it for a long term. So you've got to stay calm. And I will be honest, I reach way back, to the Romans and Marcus Aurelius. You gotta be a little stoic in real estate, because you've got to embrace that inner peace and not let external events really rattle you.
Yep. Yeah. Meditations is one of my favorite books. It's
awesome.
It's my go-to bathroom book. I love how, little snippets you can read gives you some good things to think about. But yeah, so things are gonna, shit's gonna hit the fan in every deal. Well, not every deal, but you just have to expect things to things to go wrong, and then just deal with them, because that's just the way real estate is. And it is, it's gonna happen. So just keep calm and fix the problem and move on.
Well, I will say one thing that really also happened as a result of that is it strengthened my relationship with one of the partners. And if he can tell me any information on any property in DFW, he will do it.
Yeah.
He has actually helped guide me away from certain properties because he knew that there were certain issues, either with some gangs or some plumbing, or some things that were internal to the condition of the property. So he's been a good friend in that regard over our little bonding over our struggle. Yeah.
Yeah. It's interesting you mentioned gangs. I feel like that is the tenant base is one of the more difficult things to quote unquote fix. Fixing pipes, underground utilities, that is something that you can do. You call a contractor, you have them go out there. But if you have a really bad tenant base that's scaring people away, that's a really, really difficult problem to deal with. So
it's really hard to re-tenant.
Yeah.
It really is hard to re-tenant.
Yeah. All right, that leads us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Well, they can go to my website, www.excalibur, Texas. I'm going to spell that EXCALIBRE, Texas, TEXAS.com. So they can do that. I'm also on social media. So I'm on Facebook and I am on Instagram. But and my marketing team would love for them to go to that website. And they also will they'll get a free gift. My little autoresponder will give them a free gift when they fill out the contact page. And I would love to connect with them more with my Money for Life call. Just get them to at least first base regarding multifamily and just get started. So I'd love to do that. And again, it's www.excaliburtexas.com. Fill out the contact page so I can connect with you more.
Perfect. I will put that link in the show notes. So if y'all want to reach out to Sharon, just click the little more in the description. It'll pull down that full description, and there you can find Sharon's link.
Excellent.
All right, Sharon, that wraps it up. Thank you very much for hopping on the show.
Well, thanks so much for having me, Gabe. It's just been so easy and great talking to you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.